This is like a general kind of macro trend and wave which is happening. The revolution will not be centralized.
The whole idea of a centralized company charging fees for a listing, getting some of the token, and then dumping it on like retail, as CG said, it's antithetical to really why I care about this space and why I'm here.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Today's topic is Binance and token listings. Here to discuss are CJ Hetherington, CEO and co-founder at Limitless Labs, and Nick Tomaino, founder and general partner at One Confirmation. Welcome, CJ and Nick.
What's up?
So CJ, you went viral on Tuesday with a tweet in which you revealed the terms that Binance offered to you to list your token on their exchange. I'm just going to read what you tweeted. 1% airdrop on day one, alpha listing, 3% further airdrops in 6 months, 1%, so this is like 1% of your token for this airdrop, et cetera. So 3% for further airdrops in 6 months, 1% for marketing at Binance. Binance has full discretion. Yeah, they would provide 100% of TVL for the token pool and PancakeSwap at $1 million plus. You would have to put down a $250,000 security deposit, 3% of the tokens reserved for BNB holder program, hodler program, which this is like where BNB token holders earn airdrops from tokens that are soon to list on Binance. You'd also have to pay another $200K worth of tokens for Binance affiliate marketers. And then you would also have to pay $2 million in a BNB security deposit for the spot listing. Whew. So it takes courage to reveal the terms that the world's largest crypto exchange is offering you, since these deals are obviously meant to be confidential. And so you know when you're doing that you're going to be burning that bridge. And that's the bridge to the number one most powerful centralized entity in crypto. So walk me through your thought process that led you to tweet that, because that takes balls. So explain how you came to that decision.
Well, I think it was a very unique case because there were no confidentiality agreements in place. So I wasn't actually, obliged to necessarily keep any of that information secret. And I think that truth is a very important thing and we need more of it in the world. And there's a lot of, speculation and back and forth about how sex listings actually work and Binance in particular. And I think that it was just, my hope that by sharing this, we can actually move the space forward and kind of rip off the Band-Aid, have a very constructive, yet productive discussion. And actually, I think that something that people are maybe not that aware of is that there is a large cohort of people, which some may call it cabal, right? Which consists of not only centralized exchanges, but also founders and market makers. And, when you're probably a long-term investor or founder, you look at this kind of, offer and you think how on earth does 8% of the entire network, right, make sense if we're talking about the next 3, 5, or even 10 years, of a new ecosystem. But this cohort of people, they don't think in 3, 5, or 10 years. They think about day one listing and dumping on day one. And I guess that changes the entire calculus because they're really not thinking long-term at all. And they're just trying to generate exit liquidity from retail who are hardworking, ordinary people with skin in the game who believe in these tokens that are actually getting dumped on. And that's the thing that I want to change because we won't last very long as a space if this is what we're doing because it's not sustainable. It's actually crime, by the way. I really respect Binance. I really respect CZ for everything they've done, for the space in general. But that said, I really believe it's important to have open and constructive, conversations and feedback from the market and really change how we approach token launches and distributions and communities in general.
So Nick, I don't know if you knew in advance that CJ was going to tweet that, did you? Or
No. This is the thing. I see some people saying this is some marketing thing to promote Limitless or something. That's not how I operate, or really anyone in kind of our orbit operates. It's like we tell the truth, and when I think a lot of people in the space are afraid to tell the truth, right? About because if you're a founder and this giant is perceived to be important for tokens, then you don't want to piss them off, right? But in my career, I've always been surprised to the upside of what happens when you actually just tweet the truth. And so I think we need more people in the world, really, founders in the space, people in the world like CJ. And I know CJ in real life, right? There's so many people in crypto that are Twitter fingers, focused on perception and not really doing anything in real life. CJ is a young, hungry, tough kid in real life. This dude's a boxer, okay? Like a real life boxer. Like he's just being himself. So I just love to see that. To me, Binance is really irrelevant. I've never used a Binance product. I don't really know anything about what they do. I tried the product when it first came out in 2017. I logged in. I never traded, but I wanted to see how it worked. And it's never for me. I'm interested in bleeding edge crypto products that are pushing the space forward. And respect to Binance for being a behemoth, right, and being a fast follower on these things. But it's never interested me. And the story really isn't Binance. It's we need more founders that are willing to show some courage and be themselves. And that's what CJ did. And to me, really, the other interesting thing is just the response to it, right? I think that the response on both sides is very interesting, and we can talk about that.
yeah. So before we get into that, because I do want to ask about that, CJ, I just wanted to understand, I asked you about like what led you to finally tweet that. And it sort of sounds like you had been noodling on these problems for a long time. And then you kind of had this moment where they sent you the terms and you hadn't signed an NDA and you were just like, I'm just going to run with this. Is that kind of how that happened? Like, because like they could, like you could have signed it and then and like sorry, they could have sent it to you in advance and made you sign it before revealing whatever the terms were, and so then like you wouldn't have been in this position. But like somebody potentially would have had the opportunity that you had where they didn't sign it in advance, but like it wouldn't occur to them to reveal it. So like, yeah, explain kind of just what happened in your head there.
Yeah, sure. Well, I mean, I definitely didn't expect that it would get millions of views. I thought it would maybe get like 100,000 views. And honestly, like I just wanted to compare the two ecosystems, like for other builders, right? Because I get asked the question like literally multiple times per week, like why do you decide to like build on Base? Like literally, I'm tired of being asked this question. And so, and then when I was thinking about it, I was like, well, this is like the approach of one ecosystem, and this is the approach of the other. Like, and I just wanted to share that with the world and be like, isn't it kind of obvious, guys? And yeah, truthfully, didn't expect that it would blow up as much as it did, probably.
Okay, but can you share why it is that you chose to build on Base?
Well, I mean, I think that it's a very supportive, like builder ecosystem, and doesn't have like these kind of like token supply grabs. And if you build something meaningful, I feel like you will get supported not only by Coinbase, like as an entity, but by the broader community as well.
But I think the point is this wasn't like some super calculated thing, right? It's like you've tweeted other things kind of like this before. It's like it's just how you feel, and you posted it, and this one in particular blew up, right? I think when you're telling the truth on Twitter, it's like a lot of what you post really doesn't get any engagement at all, right? Because you're not chasing what the popular thing is or whatever. But sometimes it strikes a chord, and this one struck a chord, right?
Huh. This is really interesting because honestly, one of the questions that I had written for you was if it was calculated. And the reason is last week, Jesse Pollock tweeted multiple times about centralized exchanges charging an arm and a leg for listings. He said, raise your hand if you are ready to go to war against sex listings that charge 2 to 9% of a token supply to be listed. He tweeted this multiple times. So I kind of actually thought that maybe like you guys had planned this out, but it sounds like it was much more spur of the moment.
No, it definitely wasn't like orchestrated. But I would say that like Jesse is not the determiner of public sentiment, right? And I feel like a lot of people, recently after this, very kind of large scale cascading liquidation event which occurred, which is in a way, it's almost kind of impossible to say that it wasn't pure market manipulation because you have cases where liquidity vanished from order books, and to me, it looked pretty obviously like an orchestrated attack on retail investors, very much a drive-by on retail investors, and so I think that it's not only the kind of the listing that has created this like negative sentiment. I do believe that centralized exchange sentiment is at an all-time low. I don't believe that's just because of Jesse or just because of Coinbase. I think that's because the on-chain world is becoming much, much bigger and seeing a lot more adoption and attention. And people are kind of waking up to these like extraction and manipulation games, and they know that there is a better way.
Well, and if I can add, this is like a just long-term macro trend, okay? Like in 1992, Hal Finney wrote that the computer can be used as a tool to liberate and protect people rather than control them, right? And that's why I'm still in this space and I care about it so much. And I think a lot of people look at the early cypherpunk movement as kind of anti-government, right? And the focus is on the government aspect of it and government control. And I think that's very real. But if you look at the current administration in the U.S., okay, it's very much a pro-freedom government now. And if you look at what the SEC is doing with the crypto task force and the CFTC, and there's a lot of a big push really for more freedom for entrepreneurs and people generally. And when you have that, that opens the door for big companies to control people, right? And so I think it's on the people, it's not on regulators, it's on the people to kind of rise up and call it out when it's happening. And it's not to say it's evil but we need to talk. We need to have honest conversations about it more. And to me, that's kind of some of the discussion that we're seeing post CJ's tweet.
Yeah. Well, CJ, you also tweeted, haters told me no one would want to work with us after such a tweet. The reality is more people are reaching out than ever. So tell us a little bit more about what happened behind the scenes after your tweet.
Well, yeah, I mean, this was the kind of knee-jerk reaction. There were two kind of main like thoughts towards Limitless. The first one being that no one would want to work with us, and the second one being that no centralized exchanges would ever list our token. And I can say with certainty that neither of those things are true, but also like don't feel comfortable disclosing like precise details about any of that right now because a lot of wheels are still in motion. But definitely, we have a lot of like exciting partnerships coming up, from across the board, really, like from trading firms that are getting into prediction markets to decentralized exchanges, other on-chain apps, more so like financial institutions. A lot of people are excited about Limitless and working with Limitless, and the events of the last few days didn't change that at all. If anything, they accelerated us.
Wow. Okay. It almost sounds like what you're saying is that there was kind of general sentiment, whether or not it was like, we don't have to say specifically it was against Binance, but maybe it's just like interest in more things happening on chain and less interest in things happening in a centralized manner or something. And so like when they realized you were sort of part of that movement, they were like, hey, let's work together. Is that maybe how to characterize it?
Yeah, I think also what Nick said, this is like a general kind of macro like trend and wave which is happening. Like the revolution will not be centralized.
We're televised. Okay. So I guess so Nick, as you mentioned, you have invested in CJ. And I wondered, like, for you over the years, I'm sure you've worked with like so many different teams where there is this calculus about like, Binance has a lot of influence in the industry. They, are the largest centralized exchange. They have users just like in so many different jurisdictions all around the globe. And, CZ himself is very influential. So, like, over the years, how have you seen other founders try to grapple with this question of like sort of the double edged sword of getting a Binance token listing?
Um, Maybe some of our founders have gotten token Binance token listings in the past, but it's not never something I've focused on or care about. Like I want founders who want to push crypto forward to be themselves and build products that push the space forward. It's like the token game in crypto has never really been my thing, I guess. So I do think tokens are very important as a way to give ownership to users. And so I very much encourage teams to first build products and then do token drops to users. Like I think that's a great thing. It's one of the biggest innovations of crypto. And then where that gets listed, I think if there's demand for it, it will it will get listed places, and other people will own it. Like the whole idea of a centralized company charging fees for a listing, getting some of the token, and then dumping it on like retail. As CG said, it's antithetical to really why I care about this space and why I'm here. So, and the thing that I just think you need to be mindful of is people and companies that are projecting themselves too strongly and projecting narratives that are deceptive. And FTX, right? FTX was projecting their narrative super strongly, and it wasn't the regulators that took FTX down, right? It wasn't the mainstream media. It was the crypto community. And I think to me, the ethos of crypto is like more transparency, more truth. And for people watching that care about truth, the truth is in the comments. Okay, it's not in the OP, the people strongly projecting. You need to study the comments, and of course, with the AI and bots, that can be hard now too. But I very strongly think that the truth is in the comments, and that's kind of what you need to look out for.
I did want to actually just like Nick very briefly alluded to this, and I know CJ, you have a lot of comments on this. Nick talked about how there are token teams and VCs who will dump tokens. It's sort of like a kind of get rich quick mentality with the tokens. And CJ, you mentioned before we started recording that you have a lot to say about that. So, like, give us a little bit more color on what you're talking about.
Yeah, so there is as Nick said, right? Sometimes the truth is not in the OP; it's in the comments, and sometimes the truth about the token supply is not necessarily in the tokenomics sheet, which is published by a particular team. And what happens is there is very much kind of gray area within these like supply distributions where people are, willing to pay like 8% of token supply, which can never be like long-term sustainable for the majority of networks, which ultimately just has really dire consequences for the hardworking people that believe in this and buy into this, right? Because ultimately they are like the exit liquidity and they're the ones like getting dumped on. And so that's actually why we see a lot of like this kind of like listing fee structure actually being accepted, is because people are not playing long-term games. People are out for kind of very short-term extraction and like dumping on retail. And there are actually a lot of bad actors that I'm calling out here. And this is also what Nick mentioned, when you can look at the responses to this truth and transparency. You kind of clearly see two camps of people, right? And there are camps of people who are like, this is for sure bad, and it doesn't even make sense because they're thinking in 3, 5, 10 year horizons and from the perspective of not doing crime. And then there is another, kind of tribe of people who are like, pushing back heavily against this level of transparency. And potentially, that's because they're on the wrong side of this and on the wrong side of history.
Okay, so I do want to also just ask one other thing, because everybody was talking about how their proposal to you was to take 8% of the tokens, and if you look at the proposal, it was for specific purposes. 1% for like this airdrop, 3% for further airdrops over 6 months, 1% for marketing, another 3% for their BNB hodler program. So it wasn't like, give us 8%. It was like, we're going to use it for these specific purposes. And as I'm sure you're very well aware, everybody is talking about how this sort of like phase that we're in right now with crypto is distribution. And that's why people are saying like, oh, like, Stripe's stablecoin efforts are going to be really strong because they have distribution. Or the reason why people want to build on Base is because, like if you get like any coins on any, Base dexes immediately are tradable on Coinbase. So again, it's like a distribution play. So, the devil's advocate question to, what happened this week when you tweeted their proposal is just, they can do this because there is a benefit to, reaching their huge number of users. So, what do you say to that? That like actually what they're doing is not only smart, but it is beneficial to those token teams.
It's beneficial to them if they're dumping on day one, but not if they want to build a long-term sustainable token network.
But even though like some of this is for like longer term, like 3% is like for airdrops over several months, like you still feel like this is just more a get rich quick kind of offer.
I mean, there's data for this, right? Like, I think we could look at. I don't know it off the top of my head, but you can look at the performance of the Binance Launchpad or whatever their product's called, and how those tokens have performed, right? And my guess is that they have not performed well for their user, for the people that are buying into those. But they, it performed great for Binance and maybe even good for the token teams who, as CJ said, could dump. So, and Binance is a great, they've to this date been a great business. No one's saying they don't have the right to do this. And maybe it's even smart if their goal is to accumulate as much money, power as they possibly can, right? Then maybe it's a good strategy. But I think, to me, the again, the interesting thing, which we haven't even talked about, is the Binance response to this, okay, which was the Binance support threatened to sue CJ and then deleted it. And then CZ, called CJ a loser, right? Like, that's a little weird, don't you think?
Yeah, yeah. So, okay, I'll fill everybody in on all those things. Okay, so there was like a funny moment. You posted what I guess was like a fake screenshot saying that CZ had blocked you, and then he quote tweeted and was like, "Wow, this guy is really clout chasing, but what a loser! I didn't even know who he was until he posted this fake image saying I blocked him. I could make it real, but I will choose mute instead. Ignore is the best rejection." And then you tweeted back something like, "Oh, I played you," or what did you say? Something like,
No.
CZ, you got played."
Played yourself. That was a meme. Like, that was obvious. Anyone paying attention knows. Like, that was a meme, right? Like, and CJ and CZ responded to it just with a complete lack of awareness.
Yeah. Okay. So then there was another one where Binance said your post was false and defamatory, but then also said that your tweet contained illegal and unauthorized disclosure of confidential communications with Binance. And people were pointing out, they were like, wait, it can't be both. It's either false and defamatory or it's like like a real offer. And then of course they had the veiled threat to take legal action against you, and that's what they deleted. And then the other thing is that CZ during this time posted the long story about how Binance made a bunch of its ICO participants whole. Sorry, not from the Binance ICO, but from like other ICOs back in the 2017 era, and how at that time it cost them $6 million, which was 40% of all the money that they had. And he like made it into the story about, how like Binance always puts its users first or whatever. And then somebody quote tweeted it and said, "Oh wow, CZ is like shitting his pants," or I forget the language they use, but these were some of the things that happened in the aftermath. So I guess why don't you comment on, how you are reading their response?
I don't know. I don't know what to make of it. I think it's interesting. And I think the response the other way is almost more interesting, right? There, you can, again, if you're looking at the real organic human response and not bots, you can tell what side the truth is on, and there's a lot of people kind of organically. And again, I don't know the specifics of all the things they're saying. There's experts on Binance, but like you can tell that there's people that are increasingly questioning, Binance's practices. And to me, one of a tweet that you didn't mention that is quite interesting. And I would love if there's anyone watching that's like a kind of an on-chain sleuth that can actually get the true inflows and outflows numbers on Binance Exchange. That would be, I think, very useful, because the girl co-founder, his girlfriend or whatever, tweeted, they're all tweeting these inflow and outflow numbers, and I think she tweeted the DeFi llama ones. What is the true? And I don't know the answer. I think my point is, let's have a discussion about it and let's get some more transparency, because the benefit of being on chain is you can see the actual numbers, and there's no questions about what's the true inflows, outflows. If you go to Uniswap and look at their TVL or Aave or any or Airdrome or any of these, right? You can see the actual numbers, and I think in the case of Binance inflows and outflows, it'd be very interesting for someone to look and see what are the true numbers, because there's very conflicting numbers that I've seen.
Yeah. So the CoinGlass, the tweet that sparked this discussion was, so CoinGlass on Tuesday, basically, what is this? It's like a little over, it's like 15 hours, I think, after CJ's tweet, tweeted that Binance had experienced $21.7 billion in outflows over the past 7 days. But then so if I just look at DeFi Llama at the moment, it's saying that Binance had $248 million in inflows over the last 7 days. So it's not exactly the same, because today is the 16th. But it's strange because, obviously there was like the liquidations there's been a lot of kind of like negative news for Binance over the last 7 days. And it doesn't feel like more than $22 billion worth would have flipped in the last 2 days since the CoinGlass tweet. So, yeah,
So why are the DeFi llama and CoinGlass numbers so different? That's what someone watching can.
Oh, wait. No. But you guys, wait. This is interesting. Okay. When I click on the CoinGlass link, which is current. So before I was just reading the tweet that they tweeted on Tuesday, but now when I click on the link, it actually says over the past 7 days, Binance has had $356 million in inflows. So that's interesting. So their inflows changed. So if on Tuesday night, it was almost $22 billion in outflows, but then this is Thursday at noon. So what is it's not quite 14 hours, it's like 39-ish hours. Suddenly it's at a positive 356 million, which is much closer to the DeFi Llama 250 million. So that's interesting. We're not going to figure it out right here, but I just wanted to note that.
Another interesting thing, just while we're on this topic, is that like Hyperliquid was ranked number one by liquidations. When we had all of those liquidations a few days ago, like Hyperliquid was ranked number one, but most probably centralized exchanges underreport the true extent of liquidations. And the reason why Hyperliquid was number one is just because their liquidations were like fully on-chain.
Huh. Right. So who knows? I mean, and yeah, I guess Binance, their reimbursement was just limited to the ones involving those three assets, the USDE, what was it, BN Sol, and then WB ETH. So yeah, so that's not really indicative of like what happened on the chain, kind of like when, in totality. I know. Let's talk about the tweet that I accidentally showed on screen a little bit earlier, which I didn't mean to do, but we're using a new platform that I'm not familiar with, which is why that happened. So you saw it, CJ. I know you did. It said, CZ going to bury this project. That's the one. So, like, I wanted to ask you about that because, like, I don't know. So they, you guys had this back and forth. They, kind of made this veiled attempt at a legal threat, and then they pulled it back by deleting the tweet. Clearly, sentiment is against them. Like, are you worried at all? Like at this point, obviously, I'm sure your token probably isn't going to get listed there, but like, is there anything that you worry about that they could do? You know, regardless, or do you feel like, it like, yeah, just what's done is done, but they can't hurt you otherwise? I'm just curious.
I think that like as a space and like as an industry, we still have a way to go, especially like for on-chain apps. It's only pretty recently that on-chain apps really started to break out, and I think there's still a long way to go from like the current state of what are mostly centralized businesses that kind of build on top of crypto and make some integrations with that, and like have like crypto deposits but are still ultimately like custodial products. And I really think we do better to help each other and, not to try to fight against like honest and open conversations, but actually to embrace them and to embrace kind of like constructive feedback and, kind of help each other actually to build like a better industry.
And yeah, I think that's well said. I just want to add, I mean, I get that sentiment because, look, they buried FTX, right? And they're very powerful. So completely hear that. But as CJ said, it's like, I think truth rises to the top over time, and having honest, transparent discussions rather than these kind of tribal wars is definitely what we need to move towards. So much of crypto is so tribal, and it's a great thing in a sense, right? It's in some ways it's why Bitcoin is what it is, and why the space has grown. But I think we get into these kind of mimetic battles that are turn out to be zero sum, and what we really want to do is recognize that it's still a positive sum space, right? Like U.S. politics is zero sum, right? Because there's no growth anymore. So it's just these kind of lame tribal battles. But like crypto is still growing, and we want to basically have honest discussions and push forward. So.
Okay. Well, just I guess one last thing that I wanted to ask you about was, their final word on this was this clarification tweet where they sort of described the listing process and, the purpose of kind of the different demands that they had. So they said, quote, Binance does not make money from the listing process. All project token allocations go 100% to users through marketing campaigns, including alpha airdrops, launch pool, hodler airdrops, trading events, earn APR campaigns, and more. Our business model is simple: small trading fees, not listing revenue. To protect users, Binance requires a refundable security deposit from projects. It acts as a safeguard against short-term exploitation and ensures the project team stays committed post-listing. Once a project meets its commitments, the full deposit is returned. If you're in the early stages of your project, Binance Alpha is the best go-to-market path. No listing fees, just visibility, education, and growth, et cetera, et cetera. So I was just curious, like, do you, like, everybody knows that in crypto, incentives, farming, like all these things are kind of like tools that different teams use, and that's sort of what they're saying here is like we're using it, to have people like farm in these different ways. Like, do you yeah, just do you take them to task for that, or do you feel like that is sort of a legitimate reason, or what do you think of this way that they're framing these offers that they're making?
I would willing to be the counterparty for this bet.
Meaning that that like your token will succeed without all that.
No, no. I mean, like, I would like to. I mean, like, if this was a prediction market, and you would quote me some odds that this is true, I would be willing to bet against you.
Okay, so you feel like this is just extraction and their users will dump, and it like won't help the projects that take this deal.
Yeah, I don't believe that these kind of like supply distributions are like a net positive thing for users and for retail investors. And I would be willing to like bet against that. And as Nick said, there you can just look at the data, right? Like like we can just look at the chart for you know like Binance Alpha listings, and the kind of the proof is there.
Okay. And Nick, what do you think of what they said?
I don't even. I don't. It didn't register with me honestly. Like I think at this point, I I think we're talking way too much about tokens, and it's like prediction markets are taking crypto mainstream in a way that like no other product has, um, and it's ultimately the products that matter, right? We need. It's like there's so much like inward nonsense that we focus on in crypto, and it's like let's focus on the products that are pushing the space forward. Let's forget about what tribe we're on. Forget about this token, that token. It's like let's focus on prediction markets, and Limitless is one of the leading on-chain prediction markets, right? That is, I think, has a chance to really onboard new users to crypto, and that's what I care about.
So talk about that when you said like we're too focused on tokens. Do you feel like it's almost like crypto is trying to use tokens to resolve problems that are better resolved in other ways or something?
Well, look, I get it. Everyone, the initial use case for me, for pretty much everyone in crypto, when I was, in my early 20s, it's like you don't have a lot of money, you want to make money any way you can, and tokens, meme coins, token listings, whatever hype narrative is looks like a way to make money for young people, right? And it's it's not necessarily a bad thing either. I think like as much as you can try to be paternalistic and tell people not to do that stuff, it's like people are going to do it. And for me, like I did it. I was a degen. I lost a bunch of money. I leveled up, and so and then I learned that you actually you need to be curious. You need to think long term. You need to use products, and that's how to really make money and change your life in crypto. And I think there's companies out there that their business is tokens, and they're trying to make as much money as possible doing, selling tokens to retail, and they invest a lot of marketing dollars in doing that, and it becomes too part of the discussion. So that's all. It's like, token. It's like an insider game that also can bring in new people, but then most new people end up losing money from it and having to learn and level up. And so I hope that, we can get past that and start talking about useful products. That's all.
Okay. So let's talk about that for Limitless. Like, what's your plan here? And it can involve your token and your TGE, but like generally, how are you thinking about how to make this project a success?
Oh, one thing I want to add too, by the way, is like, I don't want to be shilling this product or token like too hard. Like, let's talk truthful about it. But like, the reality is 99% of people that come on this show are just shilling their narrative, and it's like it's tiring. Like, and it's people that have made a ton of money too. I don't know why they keep doing it. It's like there's something soulless about it to me. And I think if you're someone watching this, it's like buy Bitcoin, buy some ETH. Most people, they spend way too much time and energy trying to find the next big thing, and they end up losing all their money. So put 90% in Bitcoin and ETH, and then use products. And if you want to try Limitless, use Limitless. I wouldn't even advise anyone to buy Limitless, right away, unless you really use and understand and love the product. I think that's kind of just the reality. I don't know, CJ.
Like you're looking for, like, when it comes to that mercenary versus missionary customer, you're saying that you are looking for the missionary customer.
Yeah, I mean, look, long term, we want to make this thing, one of the most impactful trading products for people, right? And if people buy into that and believe the long term vision, then buy the token. But the problem is 99% of people that are jumping into tokens, they don't believe in anything. It's like believe in something. It can be this kind of stupid saying that people use, that some people that say it don't even, there's a project out there called Believe that actually believes in nothing. So it's like you need to be skeptical of the people that are saying things like blatantly, and be skeptical of me too. But I think what I'm really saying is like believe in the mission of Limitless, right? Which is bringing more truth to the world, on-chain transparency through prediction markets. And if you buy into that, then, use the product and maybe get airdrop some tokens and maybe even buy some tokens. But like, I don't want to be shilling any token to any like young person watching this. I just think we need to move past that as an industry.
Okay, CJ, so answer the question I asked about, like, how you plan to make Limitless a success. Whether or not you plan to use the token, you can mention, any strategy.
Yeah, well, I mean, fundamentally, I believe that all markets will move on chain. And of course, the kind of markets that we're most excited about right now is prediction markets. And we see huge potential, and we believe we can onboard millions of net new customers into the space through prediction markets. And that's what Limitless is focused on, and especially right now in global markets, and making it super easy for people to get onboarded and start trading like in just a couple of taps.
Well, so basically your focus is like just get people interested in this product, and like more like a product market fit type of strategy.
Yeah, for sure.
Okay. Well, so I know. Oh,
The fact that you even have to ask that question, I mean, isn't that what we're trying to do? We're not trying to just shill narratives and tokens to people, right? We're trying to get people to use products, and the token can be rocket fuel on a product that's successful. And we want a team to be aligned with users. So we want to, create tokens to give ownership of the product to users. But it's like, there's just, we're not trying to, and we will, one of the interesting things about Limitless, okay, Polymarket, of course, is the pioneer and the giant. And again, if people watching want to look at a founder to model yourself after, really, I think it's Shane, right? Because Shane is someone that has willed this thing to one of the biggest things in crypto, and he plays the game his own way. He's just a real person, okay? And so, but he's in turn, and there may be a token there in the future as well. But I think one of the different things about Limitless is, well, there's many different things, but one is we're kind of, giving token ownership to users earlier, right? And so, I think it's product first, but the token is a part of it. But we don't want to be, aggressively shilling this token to anyone that, that's listening.
yeah. I mean, like listening to you guys talk, it sort of reminds me of how, back in the day when Fred Urson was like writing blog posts about how like an ICO was sort of the way like a solution to the cold start problem for any kind of network, right? That like it would allow you to attract users early, which is like an issue that a lot of networks have. But then it almost feels like you're saying like it's swung too far to the other end where people only care just about the token and they don't care about the project. They just want to make money quickly and they're not like focused on the long term. So like in this day and age when you have things that have swung too far to the other end, like how do you think about kind of how to use this in a way that doesn't create additional problems for yourself?
Well, and CJ can elaborate on this, but one thing, in 2017, you remember, Laura, ICOs went crazy, and we had, these teams raising way too much money, and it was all vaporware. They didn't have any real products. I think, we've seen good token launches, things like Uniswap, which raised, venture capital, had an amazing product, and then airdropped that token to users, and that worked pretty well. I think one thing about Limitless is we just invested in a round, and people that care about Limitless, not VCs, but just like users, people that are interested in the product, got in on the same terms that we did. Okay, and that was through Kaido, and CJ can tell you more about that. But again, to me, it's about getting users and people that care involved and aligned, because the problem, airdrops are great too, but the problem when you have $100 million VC rounds plus an airdrop, you can get a misalignment between like team and investors and users. And so I think doing something like we did here, where it's a much smaller round. It's not really for fundraising. CJ could have raised a lot more from private investors, but it's more to get users that are aligned and that are missionary, not mercenary, right? Like, I think the more we can think about how to use tokens, but make it more missionary, that's a good thing for the space.
For sure, yeah. It's like skin in the game, driving like acquisition and activation for the product, but also like giving people the opportunity to have skin in the game and like owning, like co-owning the product and the network is a very powerful thing. And if that is your like intention and your goal, then I don't think a day one Binance listing is going to move you much closer to that. But if your goal is to generate a bunch of exit liquidity and dump on those people on day one, then sure, it will work out very well. It all depends actually what your goals are, and how you're actually approaching things, and also in what kind of time frames you're thinking, right? And so yeah, I think with Limitless there's huge opportunity to kind of have like an army of token holders who love the product and use the product every day, and this kind of puts fuel in the fire, and supercharges the whole ecosystem and community.
Okay, and tell us about the Kaido like investment thing that you did. What was that?
Yeah, it was like basically just community sale, so that users who love the product and they got priority allocation based on actually how much they use the product could, as Nick said, invest at the same terms of other investors. I think, sorry, Nick, I think the terms were maybe even a little bit better for the community, with the vesting and all of that, but the allocation was kept like very small, not to create a lot of sell pressure. And yeah, it was mostly just to give this like opportunity like to the community, so that they can like have skin in the game from very early days and like build and grow this thing with us.
Okay, and I heard you talking on Bankless about how you think that it's better to do price discovery on chain. So talk a little bit about that. Like, how do you think about how to create that with Limitless?
So yeah, I mean, like market makers are another set of bad actors that if you don't actually know what you're doing in terms of like liquid markets, this is another kind of banana skin, or I would say like a kind of really dangerous time in a network's life cycle is actually the deals that they make with market makers. And but you don't necessarily need market makers to have on-chain token launch and price discovery, because of a lot of innovation that was made there. And so I think it's also better for the long-term sustainability and health of the network not to have, like loan options and a lot of supply manipulation and price suppression from the market maker side, but actually to have a much more organic kind of price discovery on chain. And I think that's a model that Limitless is going to set like a very good example with, and I believe that many others will follow.
Okay. And Nick, I wanted to ask you, because obviously you have watched the rise of Polymarket from day one. And, as you mentioned, like Shane really, he just willed it into existence. So talk a little bit about like what you learned from watching that, like, how you think about how to get these projects off the ground, and like what kind of takeaways, you feel Limitless should use for its own strategy.
I mean, it's inspiring to me, honestly. Like, and you can see the human response to Shane's success too. Like, I think it could have ripple effect, and maybe it already has. Like, I think for CJ, it's inspiring, right? Like, Shane is like a real human who's playing the game like his own way, and people can tell that, right? You can see it's not bots, it's not. It's just a human response. So the main thing takeaways is like, be yourself. Don't play the game that everyone thinks you need to play. Like, do it your way. And if you have belief in yourself and belief in the mission, you can do amazing things. And it's pretty cool, right? It's awesome to see. I think it's great I'm obviously an investor, so I'm excited about it from that perspective. But I mean, I'm excited about it for crypto broadly, because I think we need more of that. And again, back to the token, it's like there's no token. Shane was just focused on building this thing in real life and making a real life impact. He wasn't focused on crypto Twitter. He wasn't focused on launching a token and getting it hyped. He did it from the ground up his way, and I think it's just starting too. Like, I think Polymarket can be one of the biggest company ever to come out of crypto, I think.
And obviously, Shane did kind of hint that there would be this Poly token coming up. Can you talk at all about what that would be used for, or yeah?
I don't want to talk out of turn and talk too much about it, but look, anyone paying attention can tell that Shane gets it, right? Like, he understands the power of giving ownership of the product to users, and I think that's the main thing. I think another thing is that to date, okay, in crypto, you've either gone the Coinbase route of being a public company, or the Uniswap route of being kind of an on-chain token project. And there is the opportunity for Polymarket to do both, right? There's the potential for a decentralized Oracle type token and a massively valuable company. And again, that's just potential. I'm not saying that's exactly what will happen, but it's possible. And people are definitely excited about Poly. So.
Okay. All right. Well, so we've covered a lot of topics. The only last bit of like news that we didn't touch on was the fact that now Coinbase is saying that it's going to, or sorry, that it has put BNB on its roadmap for listings. What did you make of that?
CJ?
I think it's great. I think that this is how we all win when we help each other and collaborate. And I would love to see more Base projects on Binance, and I would love to see more Binance projects on Base. So yeah, very happy to see this news.
All right. Yeah, we'll have to see if they actually do it. And yeah, anyway, interesting.
Coinbase does Coinbase will do it. Coinbase does it's in the history of crypto. Coinbase does what it says, right? So they'll definitely do it.
All right. Well, thank you both so much for coming on Unchained. And yeah, we'll have to see how everything goes and see how the Limitless launch goes. When do you know when your TG? Can you announce that when that will happen?
I would turn on post notifications because it's imminent.
Okay. All right. Some alpha right there, you guys. Okay. Thanks everyone for joining, and we'll catch you all later. Welcome to this week's crypto recap. Let's begin. Binance unveils relief plan after flash crash and token to pegs. Binance has launched a sweeping compensation effort after a flash crash last week caused several major tokens, including USDE, BNSOL, and WBETH, to lose their pegs and triggered widespread liquidations across the market. The exchange said it has already paid $283 million to affected Binance Earn users and rolled out a $400 million, quote, Together initiative to help traders recover from losses tied to forced liquidations. The plan includes up to $300 million for users who lost over 30% of their portfolios, along with a $100 million loan fund for institutional participants. Quote, When we fall short, we take responsibility. There are no excuses or justifications, Binance co-founder Yi He said. Separately, BNB Chain launched a $45 million, quote, reload airdrop to reimburse 160,000 meme coin traders impacted by the crash. Analysts cited internal Oracle issues and liquidity strains as factors that intensified the DPEGs. DOJ seizes $15 billion in Bitcoin from global, quote, pig butchering scam network. The U.S. Department of Justice has seized approximately $15 billion worth of Bitcoin tied to a massive, quote, pig butchering fraud ring operating out of Cambodia, marking the largest cryptocurrency forfeiture in the department's history. Federal prosecutors charged 38-year-old Chen Ji, also known as Vincent, with wire fraud and money laundering conspiracy for allegedly overseeing the scheme through his conglomerate, Prince Holding Group. The company is accused of running forced labor scam compounds that trafficked victims and coerced them into executing crypto investment frauds that targeted users worldwide. Quote, Prince Group's investment scams have caused billions of dollars in losses and untold misery to victims around the world, said Brooklyn U.S. Attorney Joseph Nasella. The Treasury Department simultaneously designated the Prince Group as a transnational criminal organization and sanctioned more than 100 individuals and entities linked to Z. The defendant remains at large, while the seized Bitcoin, totaling 127,271 BTC, is now in U.S. government custody. BlackRock, Citi, and global banks accelerate push into tokenized finance. Major financial institutions are deepening their move into digital assets, with BlackRock leading a new wave of blockchain adoption across Wall Street. CEO Larry Fink revealed that the firm is developing its own tokenization technology to convert traditional assets like ETFs and real estate into blockchain-based tokens. Quote, We need to be tokenizing all assets, especially those with multiple levels of intermediaries, Fink said, describing the effort as key to reducing costs and expanding access to capital markets. BlackRock already manages the world's largest Bitcoin and Ethereum ETFs, worth $93 billion and $17 billion respectively, and operates its $2.8 billion tokenized BUIDL fund through Securitize. Meanwhile, Citibank plans to launch a crypto custody service in 2026, and JP Morgan is preparing to roll out crypto trading operations. In a parallel initiative, a consortium of major banks, including Goldman Sachs, Citi, and Bank of America, is exploring a stablecoin-like digital money-backed one-to-one by fiat reserves, marking a coordinated effort to integrate blockchain into global payment systems. Bankman-Fried claims arrest was meant to block his testimony on CryptoBill. Former FTX CEO Sam Bankman-Fried has resurfaced on social media, alleging that his 2022 arrest was politically motivated and timed to prevent him from testifying before Congress on a major cryptocurrency bill. Posting through a friend on the social platform Getter, Bankman-Fried accused the Biden administration's regulators of targeting him for political reasons. Quote, They had me arrested weeks before the crypto bill I was working on was set for a vote, And the night before, I was set to testify before Congress, he wrote. The Post also claimed that then SEC Chair Gary Gensler, quote, conveniently lost, end quote, communications Republicans had requested around the time of his arrest. The former exchange founder, who is serving a 25-year prison sentence for fraud and misappropriation of funds, has been increasingly vocal ahead of his November 3rd appeal hearing. Critics argue his renewed activity is part of a broader campaign to seek clemency from President Trump. Bankman-Fried has not publicly responded to those claims. Nobel Peace Prize betting surge prompts investigation into possible leak. Norwegian officials are investigating whether confidential information about this year's Nobel Peace Prize winner was leaked after a spike in online bets predicted the outcome hours before the official announcement. Data from the crypto-based prediction platform Polymarket showed that wagers on Venezuelan opposition leader Maria Corina Machado surged shortly after midnight in Norway, ahead of her selection as the 2025 laureate. One trader, using the handle Dirty Cup, reportedly bet $70,000 on Machado and earned about $30,000 in profit, while 3 accounts collectively gained around $90,000 from similar bets. Quote, "We take this very seriously," said Christian Berg Harpviken, director of the Norwegian Nobel Institute. Quote, "It seems we have been prey to a criminal actor who wants to earn money on our information." Officials said they are investigating whether anyone, quote, "managed to steal information," end quote, from the secretive selection process. Hyperliquid activates upgrade to enable decentralized perpetual trading. Decentralized exchange. Hyperliquid has activated its latest upgrade, HIP3, aiming to decentralize the perpetual futures market. The new system allows qualified deployers to launch their own perpetual DEXs on Hypercore by staking 500,000 HYPE tokens. According to project administrators, quote, HIP3 will be enabled during this network upgrade. There is no immediate change for users, end quote, but deployers can begin launching new markets, quote, once ready. The proposal, known as Hyperliquid Improvement Proposal 3, integrates with HyperEVM to support smart contracts and governance, while introducing safeguards like validator slashing and open interest limits to maintain market stability. Celsius wins $300 million settlement from Tether in bankruptcy case. Celsius Network has secured a $299.5 million settlement from stablecoin issuer Tether, ending a year-long legal battle over the liquidation of Bitcoin collateral during the lender's 2022 collapse. The dispute centered on 39,542 BTC that Tether allegedly liquidated before a required 10-hour notice period expired, a move Celsius claimed worsened its insolvency. Tether maintained the actions were contractually justified, arguing Celsius had failed to meet margin calls. The settlement, about 7% of Celsius's original $4.3 billion claim, was approved by the U.S. Bankruptcy Court for the Southern District of New York and confirmed by the Blockchain Recovery Investment Consortium, which manages Celsius's estate. Quote, Tether is pleased to have reached a settlement of all issues related to the Celsius bankruptcy, said Tether CEO Paulo Arduino. Fun bits, Paxos mints, all the money, then deletes it. In a move that briefly made PayPal the richest company in the universe, Paxos accidentally minted $300 trillion worth of PayPal's stablecoin, PYUSD, that's trillion with a T. The glitch, caused by a misplaced decimal, turned what was supposed to be a $300,000 transfer into the digital equivalent of printing all the world's money. And then some. Quote, Paxos just minted the entirety of global debt, quipped analytics firm Arkham, as traders collectively spit out their coffee. The company quickly burned the excess tokens, assuring everyone, quote, no funds lost, just our dignity. It's not Paxos's first fat finger fumble. Back in 2023, they paid $500,000 in fees for a $2,000 Bitcoin transaction. Some lessons, it seems, cost a fortune. These guys took the idea of the trillion-dollar coin a little too literally. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Margaret Curia, and Pam Majumdar. The weekly recap was written by Juan Aranovich and edited by Stephen Ehrlich. Thanks for listening.